Essentially, a candlestick body, a candlestick chart looks like this. It looks like this, where this whole thing is the range of the candlestick. Range of the candlestick means from the highest point to the lowest point. Now, if this candlestick is that of one day, that is a daily chart, then this is the highest point of the day, this is the lowest point of the day. So between open, high, low and close, we know where is the high and where is the low. We don't know the open and the close. Now, if this is the open and the market went up and this is the close, then it is a positive candlestick and it is left unfilled like white, or in today's softwares it is colored a positive color like a green or a blue. On the other hand, if this is the open and that day the market fell down and it closed below, then that is a negative candlestick, and in classical candlestick it is shaded black. In classical candlestick it is shaded black, or it is given a negative color like red. So when we come to our softwares, and if you want to change the gray to, let's say, green, then these are the new candlesticks. When I say new, the software colored new candlesticks, that is the green and the reds. What do I use? What I like to see is the conventional way, which is essentially like this. When they are unfilled, white, it means it's a positive day. When it's shaded black, negative day for that period. It can be daily, it can be weekly, it can be monthly, it can be quarterly, it can be intraday, anything. Now, this part of the candlestick, from this to this part of the candlestick, it is called the body of the candlestick. This is called the body of the candlestick. These terms are important. This over here is called the upper wick, or is called the upper shadow. This is the lower wick, or we will call it the lower shadow. So there are essentially four parts as we look at it. The high-low difference is the range. The open and close difference is the body. The body can be positive, the body can be negative. And then there are the upper shadow, and on the lower there is the lower shadow. Now, let me draw some examples for you. I've drawn 5 examples for you. All 5 of them I have purposely drawn in green uh, just to imply the fact that it's a positive day. You notice all the 5 candlesticks have the same range. It has the same range, means the highest point and the lowest point are the same. So the range is same. But the only difference is body compared to the shadows. Let's understand that. You look at the first one, this one. What is happening over here in the first candlestick? What's happening over here is the open and the low are the same. It does not have a lower shadow. And the close and the high are the same. It does not have an upper shadow. It's a rare combination, and when this happens, we call it marubozu. Marubozu. Either a positive marubozu or a negative marubozu. A strong sign of buying means जहां पे खुला था the open वहीं पे उसका low price, that is the low price of the day, उसके नीचे वो गया ही नहीं and shot up, and where it closed जहां पे बंद हुआ था वही उसका highest point था, that was the highest point of the day, a sign of strong buying by the bulls. Marubozu. An important thing to remember of Marubozu is open equal to low. Later on, I will share an intraday strategy with you, the opening highs and the opening lows. Especially हम लोग इसको करेंगे जब हम लोग live session करेंगे. The opening highs and the opening lows. Marubozu. Now उसके बाजू में एक candles देखिए. This is a very typical candlestick. It does not have any name per se, but I can call it a long body day. Long body मतलब इसका body is fairly long when I compare to the range. इसका जो range था, whatever was the range, the body was more or less the size of the range. Little less because it has a lower shadow and it has an upper shadow. Again, a sign of strong buying. Not as strong as the left hand side Marubozu, but pretty strong buying. Now let's come to this one. Now what is happening as we move to the right is the shadows are getting longer. The body is getting shorter. What does this mean? The shadows are getting longer and the bodies are getting shorter means that the bulls in this case, because it's a green candle, the bulls are not able to hold on to their gains. At one point of time, the bulls went as high as over here. They went as high as at the highest point of the day, but they slipped from the highest point of the day. So they are not able to hold on, hang on to the gains that they are making. When you read these Japanese candlestick books by Steve Nissen, you will notice that he writes, and the Japanese, if you read The Art of War and other books, you'll notice that as if trading is like a war between the bulls and the bears. And it's very important that not only do you win a war, but even after winning the war, it is very, very important that you hold on to your grounds, that you occupy the fort, and then you have to hold on to that fort. You should not actually give it back again. The candlestick charting techniques are compared with that of techniques in war. So when the body gets smaller, the bulls or the bears, either parties, are not able to hold on to their gains. As we move more towards our right, we get this, and this is called a spinning top. This is called a spinning top. And what is a spinning top is essentially a very small body compared to a very long range. Right? A very small body compared to a very long range means the bulls did all that they could. They went as high as over here. The bears took the price as low as over here. And there was a big tug of war, a big fight between the bulls and the bears. But end of the day, who wins? Essentially, no one wins because the body is very small. So this tells us that, there is not much clarity. Not much clarity in terms of who has the upper edge, who has the upper hand. Is it a more of a bullish day or a bearish day? Can't say. And then come to the rightmost example. This is a Doji, a very famous candlestick, a very infamous, a very misunderstood a very well abused candlestick pattern, Doji. Doji means khaya piya kuch nahi, botal tora, glass tora, 12 ana, or something like this. It means that the bulls took the price towards the high of the day, the bears took the price towards the low of the day. Big fight between the bulls and the bears, but end of the day, no one has an upper edge. No one has an upper hand. Where was the open? There was the close. This is a doji, and a doji signifies uncertainty. Uncertainty of the trend. Let me take you to doji a little bit further because doji is extremely misunderstood. Correct. The third one, Sanjay is saying the third one has not clarity, is also not clarity. Yes, so this lack of clarity, whether the market is on the upside or the downside, reduces. Look at the first one and the last one. As the shadows increase, the body shrinks. As the body shrinks, it is a sign of strong tug of war. It's a sign of a strong fight between the bulls and the bears over here. I'll take you to a deeper understanding of the doji. It is necessary. Let's say you have a rising chart, and after that, you have a doji. Now, theoretically, when you read all these things, you know that this is a doji, and doji means uncertainty, and uncertainty means I don't know what will happen, so let's sell, the market will fall. Completely wrong. Well, doji means uncertainty, and this uncertainty is of the underlying trend. So you quickly ask yourself, is there a trend? Is there a trend or not, first of all? So a doji happening after a trend and a doji happening within a range, when the market is in a range, is completely different. So when there is a doji and when there is an uncertainty, uncertainty of what? See, when the market is in a range, it's already bloody uncertain. उसके बाद अगर एक डोजी होता है अनसर्टेनिटी के अंदर अनसर्टेनिटी, does it give you any added information? The market is not going anywhere, it's stuck within a range, कहीं नहीं जा रहा है. उसके अंदर if I make a doji, does it give me any added information? Not really. It is adding to the uncertainty. For sure it is adding to the uncertainty, but the uncertainty is already there. Now come to this example where it's an uptrending stock, so there is a trend. When there's a trend and there is a sign of uncertainty, this is an added information. Now I get a sign of uncertainty, and this uncertainty can be in terms of the underlying trend. I ask myself, what is the trend? I can see that the trend is up. So if the trend is up, why am I uncertain? What can happen? So two things can happen. One, it can come down. So the uncertainty can lead to a reversal, or the uncertainty can lead to a consolidation. These are the two possibilities. So just by looking at a doji, you do not short. Just by looking at a doji, you do not take a reverse position. The doji indicates a possible halt. This halt, this stop, this ease off can lead to either a reversal or a consolidation. So just by a doji, do not trade. I have seen many people who loves the candlesticks and they love to trade these patterns. It's completely okay. But the more you read, the more you realize that at a singular level, everything fails. At a singular level, a pattern has very less chance to go right. But when I have a confluence level, when I have a convergence level where there is a support, there is a candlestick pattern, there is some other indicators who are all suggesting that it's a buy or a sell, when there is a confluence of the same information from various other sources, that is a trade. I will get to that surely when we start the strategies. So Moral of the story, with the help of the doji example I'm telling you, is just based on one candlestick pattern, please do not trade.